Every so often, an interview is also a reunion. Before he led a real estate program, Kaushik Vardarajan spent 15 years at HBS, the global consulting firm focused exclusively on the hospitality industry. For this interview, Kaushik sits down with the man now running it across the Americas. This is the Distinguished podcast from the Boston University School of Hospitality Administration, recorded on the road at the NYU International Hospitality Investment Forum in New York City. Our guest is Clough, president of the Americas for HBS, who has built his career there over more than 3 decades. With some of the deepest data in the industry behind him, Rod explains why this year's performance has surprised almost everyone, where he sees opportunities well beyond the headline markets, what brokers and clients are really feeling, and how HBS is leading into AI without giving up the human judgment at the heart of evaluation. Here is the conversation.
So we are, again, on the sidelines of the NYU IHIF conference in New York, and I'm so delighted to welcome my next guest, Clough, President of the Americas for HBS. Rod, such a pleasure to have you. Thank you for joining us.
Thank you for having me. Pleasure to be here.
And Rod, you've spent 31 years at HBS. I personally have known you for 26. So we go way back. And
Yes.
it's incredible what you've done at HBS over those 31 years.
Thank you.
And I still remember how much I enjoyed working with you and working for you. So this is even more of a pleasure to have you on this podcast with me.
Thank you.
So Rod, we'll dive right into it.
Perfect.
As you're having a busy conference. So, we've always discussed that how current investors and potential investors act and react to the market depends on a combination of data and sentiment.
Yeah.
So let's start with the data side of things. Given the massive volumes of data that HBS has access to, what are you seeing at a macro level in the US markets?
So what is interesting right now is how surprising I believe the performance of our sector is. I don't think anybody really thought the hotel industry would be doing quite as good as it's doing right now going into this year. We at HVS did see the writing on the wall that RevPAR would be up this year and things would be relatively good relative to last year. And many of the other forecasters out there were negative on the industry and thought it would be even worse this year than last year. We just didn't see that. But what's surprising is how even on top of that kind of positivity that we saw, that it was even more so, that rates are back at levels we didn't think that they'd be back at, except for in the economy sector, but all other sectors are up. So it's prompted us to really reflect on where is the industry right now? Why is this happening versus what we all thought would happen? And we've been talking, as you know, we have offices across the country, and so we're consulting always everywhere, and to really kind of dig into what's happening. Why is this happening? And it's been fascinating. Really, people wanting to get back out and travel. People hesitated last year. People getting back to business, realizing that all of the uncertainty that was brought up last year with all of the changes in the administration and whatnot, I think people realize that perhaps this is obviously a new normal that we're going to have to get used to for the next few years. So let's just get back to business, and let's get back to traveling, and let's get back to enjoying the industry.
Yeah, that's great. So I joined your HVS Live Insider briefing call last week, and you spotlit 3 big markets. You spoke about New York, you spoke about Miami, and you spoke about San Francisco.
Yeah.
You also referenced Oahu. So now, everybody's been talking about these markets.
Yeah.
For the obvious reasons. And now I wanted to ask you, are there markets that you're most excited about that are not on this list, that people are maybe not talking about as much?
Yeah, I think right now occupancy in a lot of our urban centers just haven't come back to the levels that were there pre-COVID. And so many of those office buildings in middle America cities and just the urban worlds that we live in are still lightly occupied, and that travel hasn't come back in a robust way. And so in this new reality, this new post-COVID reality, folks are, even if they're in a hybrid work situation, that leisure travel factor is still so, it's just a new strengthening part of the fabric of how we travel. And that's where I think the greatest opportunities lie, is more so in that resort side of things. And I'm not necessarily talking about the big 300, 500 room resort, but the smaller boutique hotel that might exist in a beach market that is a 1 or 2 hour drive away from a major metro area, or a mountain market similarly close to a major metro area, where somebody can go into let's say they have a hybrid work situation. They're going into work Tuesday through Thursday, and then Friday morning or Thursday night, they're out and they want to go to their favorite little resort in a city that is close by, but not too far away. So that's where those opportunities lie, in those towns that are close, that maybe don't have the upper upscale or luxury hotel yet, but there's just a market chomping at the bit wanting that kind of accommodation. And so we just saw a hotel open, for example, in Ojai, downtown Ojai, at a level, at a product level that we that town had never seen. But the visionary developer there found a small pocket of a town that's not too far from LA and pounced on the opportunity. And so that's where I think we need to be looking next. Palm Springs is another great city to be looking for opportunities in. Any kind of a city where you're outside of a metro area, a couple of hours, has a resort quality to it, but maybe you haven't had a new hotel open for 10 or 20 years, and it's ripe for something new and different that the traveling public can kind of latch onto, is where we should be looking.
Okay, that sounds great. Now, also during that call last week, you polled your audience on their sentiment about where the markets are. And so I think the results then were that about half of your audience on the call thought the markets are stable, 40% of them thought they're growing, and 10% thought they're declining. Is that what you're seeing amongst your larger base of clients, or?
I think so. I think, again, it's about where you are in the country. And there are many submarkets and markets where things are moving up, but they're not necessarily moving up in a big way. Maybe occupancy is up a point or down a point, and rates steady, or rates going up $1 or $2, but not really enough to make a difference, and maybe not even enough to really counterbalance your increase in expenses. So you could have like a $3 or $4 rate increase, but your expenses are going up by $4 or $5, so it ends up being a wash. And so for them, the sentiment is stable, or for them, the sentiment might be declining, because maybe even though RevPAR is up, it's not enough to balance out what they're having to deal with on an expense side. And then you have other people that are in these up and coming markets, or in a resort market, or in a metro area that's really coming back strong. Like maybe they're in the Bay Area. So they're going to really feel the rise, and they're going to see things really improving. So I think if we broke out that survey by geography, it would tell a story of where people are located and just what they're feeling in the moment in those cities.
Okay. Now, let's talk about kind of sentiment amongst another group of stakeholders. So I think, was it fall 2025, you did a broker survey?
Yep.
And I think in that survey, about 2/3 of them expected that the first half of 2026 would improve.
Yeah.
We're almost at the end of the first half.
Yeah.
Has that proven to be true?
It hasn't. So we had, I think at that point that we did the survey, and we did an updated survey 6 months later, and ultimately it goes out to brokers, and brokers are a optimistic bunch, and they have deals in the hopper. They want to be doing more deals, so they're always looking at brighter skies ahead.
True.
So that plays into it. But I think we had been through 2025 and the years prior, ever since the interest rates really went back to normal, so to speak, and the deal flow really declined a significant amount. We've been waiting for that return. When are we going to get back to business? When are hotels going to start trading again? And there was an anticipation that with interest rate cuts and with 2025 being behind us, maybe that bid-ask spread between a buyer and a seller would start to narrow enough to really bring some deals together. But that hasn't happened yet. We still need a couple more rate cuts. We still need ADR. Well, now ADR is on that upward trajectory, which is great. We need to keep that going. And that will, with those two things in play, I think you'll start to see a lot more deals come together because that spread is going to start to narrow. Buyers are going to be able to put together a pro forma that makes better sense to a seller. What the sellers have to continue appreciating is the challenges that buyers are dealing with in terms of increased expenses and with renovation costs. And so a lot of the deals that we're seeing get across the finish line are newer hotels. They don't have big PIPs that they're having to deal with, or sellers that have really created a good story for their property, high cash flow, good quality physical plant, and a strong market, expenses in line. If you have all your ducks in a row, it makes your deal come together a lot better than deals that, might not otherwise right now.
Okay. Yeah, I think this seems to tie into what you shared at Alice, where you said that there's plenty of capital out there.
Yeah.
It's just not as many deals that make sense and that have the right stories behind them.
That's right. That's right.
Now, I remember working with you when we valued the Hilton portfolio for Blackstone. I worked with on the Extended Stay America portfolio valuations. Do you think this is a time when we get to see another mega deal like that kickstarts everything?
Well, what's interesting is that those mega deals, those buyers of those big, huge portfolios have done a very good job at selling off their non-key assets or breaking them up or finding value in those portfolios by doing the right thing. And so many of those portfolios, they just don't exist anymore. They're all owned by individual owners or they're owned by sub-portfolio owners. So I think we're going to see certainly a lot of portfolios sell, but there'll be more of those mid-size deals. Mega deals might come along if it's a group of like 10 or 12 resorts. That might qualify as a mega deal. But the hundreds of hotels trading at once, that might not come around for a while.
Okay. Got it. So, okay, I'm going to switch focus and talk about AI.
Sure.
Because everybody's talking about AI.
Yeah.
Right? So HVS now has over 300 people working around the world. You work on thousands of valuations.
That's right.
Globally. And AI is impacting kind of the valuation business just like it is others. So I remember working with Spider when it came out, and I thought it was the most advanced business intelligence tool I had ever seen.
Yeah.
How have things changed at HVS? Are you using AI at this point of time? And how do you decide what you're going to let AI do and what you're going to have a consultant oversee?
Those are great questions. So AI, how we use AI is somewhat being dictated by our clients. Major banks are now starting to come out with AI guidance and expectations where you have to be very careful not to overuse AI. And our banks and our clients still very much want the human element driving the analysis, driving the findings, driving the message. And so we're very carefully navigating that. We are creating our own internal closed loop AI writing assistant so that our associates can give it strong, appropriate inputs, and we still do the analysis with our minds and our programs, but then our AI writing assistant will take all of those inputs and help write parts of the report from our own internal closed loop system. That's what banks are very concerned about. They certainly don't want any confidential information being shared, but they also don't want us to go out to the AI world, external world, and pick up wrong information or wrong findings or wrong analysis or wrong anything. So it's a very tenuous time right now. Like, we have to be very careful, and we're being careful, but we're also not turning away from it. We are leaning in, and we're wanting to really use it to the fullest extent that we can, but still maintain our integrity and maintain the value of what we do. And then there are other aspects of AI that we're really starting to look at on, like, our administrative tasks. What are some things that we really shouldn't be doing that it can do for us, not to reduce staff, but to better use staff in a smarter way.
Okay, makes sense. Maybe you could have an AI system that does travel expenses.
Yes, exactly.
So my last question for you: you wake up tomorrow, you find out you won the Powerball, and you have $100 million after taxes. And if you were to invest that in the hospitality industry, what segments, what parts of the country would you invest in?
For me, it would be, just because of my analyst background, and I've been appraising for so long and looking at deals for so long, it does come down to location and your demand drivers. Can you find a deal or create a deal in a location that has an unbeatable location where you're not going to have a lot of new competition come in, is key. I key into, like, those profitable GOP levels for a hotel and where exactly you should be at, and are you going to be able to generate those levels of GOP for those assets? I would love to take that money and just go after, like, that gem of a hotel that could still be an opportunity. Get it for maybe 60 cents on the dollar, but because of its location, just really help it have a turnaround story through renovation, through proper branding, through proper marketing. That would just be a lot of fun.
Okay.
I would enjoy that.
Great. Rod, thank you so much again for joining us.
Thank you for having me.
Very excited to have you on the podcast. We're also very excited that 3 of our students are coming to work for you.
Yes, I'm excited about that too.
So thank you for always being a mentor to me, and thank you for being a mentor to our students.
You're welcome.
Have a great conference, Rod.
Thank you.
That brings this episode to a close. Thanks for joining us on the road at the NYU International Hospitality Investment Forum, and our thanks to our guests for sharing their time and insight. The Distinguished podcast is produced by the Boston University School of Hospitality Administration. If you enjoyed this conversation, follow or subscribe wherever you listen, and share it with a colleague or a student who would find it valuable. To learn more about our programs and the work coming out of the school, visit bu.edu/hospitality. We will see you next time.